warning investors to remain wary of policy risks in the next phase of the recovery, writing the following. Geopolitics have taken a backseat to domestic issues, but will likely have significant implications in the coming years. Trade and relations with China specifically are likely to come to the forefront. Sonal joins us right now for more. Sonal, when you say that, do you mean that in a more constructive way for risk assets or a less constructive way?
So I'd say if we look at geopolitics, they have essentially taken a complete backseat. In any other year, a year like this one, with all the events which have taken place and all the moves which have taken place in Hong Kong, for example, I think that it would have been front and center in markets' eyesight. We've had COVID, we've had a presidential election. There's been a lot which has taken geopolitics off the stage. Now, if you look at a new year where you actually have some vaccines, maybe you start letting COVID, dare I say it, take slightly more of a back seat than it has this year, together coming at a time with a new administration which is more multilateral in its approach to geopolitics in general, and China in particular, I don't actually think it's going to be necessarily constructive for relations between China and the U.S., if China and the rest of the Western world, rather. However, from risk assets perspective, I think you will have less uncertainty for sure, and that could be seen as somewhat positive.
That's the long-term story for risk assets. Let's talk about the short-term one. I know where you are more constructive, and that's on municipal bonds. I just wonder, for certain municipalities, they're going to really struggle in the next couple of months, and I've heard some mayors, including the mayor of Detroit, turn around and say that budget issues are secondary right now to the healthcare crisis right in front of us. So now, how do you square that circle right now?
So I think that what we are anticipating is, regardless of whether we have a divided Congress or a united Congress and administration, I think that we will see a second fiscal package. And I think that there's going to be more in it for state and local than we are currently anticipating. I am less negative on the potential for the size of the package, even if we have a small Republican majority in the Senate. I think Republicans will come to the table with something more than that $500 billion, which was initially announced. I think it's going to be closer to being over $1 trillion, I would say. And of course, if we have a sweep, I think we're looking at something closer to $2 to $3 trillion. This is going to assist state and locals. On the other side of things, I also think that eventually we are going to see tax increases in several of these areas, which will result again in tax-free municipal bonds being an attractive place to invest. That is our general view right now. I think that the pessimism regarding a second fiscal package is premature and overdone.